all of our closing entries, we will prepare a post-closing trial balance. That's what we're going to cover in this video. So how do we prepare the post-closing trial balance? As you know, the accounting cycle ends with a post-closing trial balance. So this looks just like the trial balance that we've been preparing all along, except now it's only going to include all of the accounts and all of the balances at the end of the period, meaning only the permanent accounts. And so let's take a picture of what that looks like. We see, again, it's still organized assets and then liabilities and then equity, except equity stops at retained earnings. There's no longer the dividends and revenues and expenses listed here, and that's because all of those temporary accounts have been closed and no longer have an account balance to report. And that's it. It seemed too simple, didn't it? Since it was so fast, we'll go ahead and just include in this objective 4.5 describing the accounting cycle. So what is the accounting cycle? It's the process that companies use to produce their financial statements for a specific period. And if you remember back to previous discussions and lectures, we said that financial statements can be prepared for a specific period, a quarter, a month, a quarter, a year, whatever it is. And so it's the steps that are followed throughout that time frame that we're working with. And it always starts with the beginning assets, liabilities, and stockholders' equity account balances left over from the previous period. So whatever we ended last period with, we pull over to start our new accounting cycle. And Exhibit 4-8 gives us a nice little picture of what the accounting cycle looks like. So you can see here in Part 1, we're starting with the beginning balances from the previous quarter, or month, or year, or whatever time frame we're talking about. Then, throughout the period, we're going to analyze and journalize transactions as they occur. And so that's what we did in chapters 1 and 2. And we post those journal entries to their accounts. So again, that's what we were doing. And we'll have an unadjusted trial balance. And so 4 is saying compute the unadjusted balance in each account and prepare an unadjusted trial balance. Then Part 5 says that we can enter the unadjusted trial balance on the worksheet and complete the worksheet, and that's optional. And so a lot of times we don't end up doing that. But if you prefer that worksheet and you like doing that, you can. Once we're there, we will complete the adjusting entries, and that's what we did in Chapter 3. And if you remember, those are the really important adjusting journal entries that we have to do to update so that our revenues and expenses are reported in the period that they belong to. And if we didn't do that, it would misstate all of our financials because it wasn't adjusted. Once we've completed our adjusting entries, we can prepare the adjusted trial balance. From that trial balance, we can prepare all of our financial statements, the income statement, statement of retained earnings, and the balance sheet. After we've done that, we can prepare our closing entries, so journalize and post them. And then finally, we'll prepare the post-closing trial balance, which includes only the permanent accounts, which then allows the cycle to continue again, because whatever our post-closing trial balance reports is what we will use to start the beginning account balances on the next cycle.